Where banks are silent, we speak. A podcast by You Mushroom.
Hello, everybody, and welcome back to our podcast, What Your Bank Doesn't Tell You. Today, we are talking about Trump, tariffs, trouble, and trade war. I think it's a very exciting topic, and I have to admit, when I read about the tariffs and followed the discussion at the beginning of the year, I just thought it's a bluff, and Trump would use it as kind of a tool to make pressure on other countries for geopolitical achievements he wants to reach. But now, digging a bit more into this topic, I changed my mind. How is it for you, Lua?
Very, very similar. And hello also from my side. I see it exactly the same way as you. It's interesting. Initially, I thought he's crazy. If you really impose those tariffs, you're going to trash the free trade, which has been an effort in worldwide since in the last 30, 40 years, and a great good. But if you look behind the curtains, US had actually, prior to 2016-17, basically no tariffs towards the European Union and a lot of other major partners. They were below 2%.
And how you say, looking behind the curtains is also looking behind the headlines of the major newspapers. Because all the newspapers, no matter whether you read US newspapers or European or Swiss newspapers, everybody is blaming Trump and kind of drawing a picture that he is completely crazy. But given the research we have done over the past few days, I think he is not that crazy and he has a very clear vision where he wants to go. But revealing this step by step, maybe we can also clarify a bit what happened and what tariffs really are.
We will. Maybe to start with, what are tariffs and why countries use them as a part of the macroeconomic arsenal of instruments which they have. As tariffs basically are protecting the local, serve the purpose to protect the local production from products from abroad, which are produced at lower costs, respectively cheaper. And tariffs are also imposed to industries which are considered of strategic importance for a particular country. Could be industry, could be an agriculture, products, etc. And tariffs basically result into costs for us consumers. So how do tariffs work? Let's say you're country A, I'm country B, I'm imposing tariffs. If one of my importers would buy products from your producers, what we would do is we would look at the prices of good produced plus the transport cost, and we would put certain percentage on top of this. And what is important is this percentage, let's say 10, 20, 30%, that actually goes to, as this is an income for the state. This is effectively really paid.
It's like a tax in the end, no?
Exactly. It's a form of a tax.
And I think we can also say that tariffs, it's quite a complex framework if you look at the global trade behavior of different countries. So there are different tariffs of different countries, and different countries, they impose different tariffs on different countries and on different goods. So I think it's very difficult to say in one sentence how tariffs really work, because they are very diverse.
It is true. And it's very intransparent, as a matter of fact. It's also very interesting, and we are going to come to that because we digged into it. What is the frame which was used to determine the actual US tariffs starting from the 2nd of April, or which were decided yesterday? What is very interesting as well is that US is a classical example of a large open economy. And now, with this new regime, they're going into a large, more like a kind of a half-closed economy. And I read today on the way to the office a very interesting statement of Krugman that basically, and he's a very famous politician, actually, he won the Nobel Prize, if I recall correctly, based on free trade. And it was super interesting to read. A lot of people actually, and rightly so, criticize the wording which Trump uses, because he's very imprecise with respect to economic terms. But the dynamics which he wants to put in place, I also agree. Economically, from US perspective, they actually do make sense.
But we will come to that.
We'll come to that in detail.
But maybe we can also spend a few words on global trade. And you mentioned the US is an open economy, and that's the US is a very important trading partner of different countries. So we digged out some figures on that as well. And globally, 22.6 trillion worth of goods are traded.
Wow.
And of course, everything which is exported is imported by another country. So the question is, who are the biggest importers and who are the biggest exporters? And we can also say in an ideal world, a country is kind of balanced. So a country imports more or less the same amount a country exports more or less the same amount as imports. So having a more or less equal trade balance in the end. But of course, a country may import stuff which the country itself is not possible to produce, and vice versa. And it's also very interesting, of the 22.6 trillion goods which are traded globally, China is by far the biggest exporter.
Yeah.
And they have a huge trade balance surplus. And the US is by far the biggest importer on a global basis.
That's very, very interesting.
Yeah, and from this respect, it also is understandable that the US wants to change the position, because if you have a trade deficit, you can say, okay, it doesn't matter, but it does actually. And very often we hear the announcement of Trump saying that basically he's selling the country. And maybe at the beginning this is not logic, because when you import more, then it's kind of more buying the world and selling the country. But of course, there are always the two angles to it. It's you import a lot for immediate consumption, but you need to finance that somehow. And this is what he means with selling the country.
Yes, and I think now if we go into this direction that we say, what is the purpose for this politics? One of the major pain points which he's trying to fix is the absolute huge a burden of debt which the US has. And of course, it's not going to fill the hole because it's a very big hole, but he's kind of trying to put some structural changes in place to make sure, to put in a way the consumption of Americans, which really is a major driver of the economy, but also a major burden. It is a kind of a double-edged sword when it comes to importing these amounts which they're importing. And yes, he tries to kind of put a little bit of a discipline in the way the economical streams in the country are. And
you mentioned a very important point is the debt, the government debt of the US. So this trade deficit needs to be financed in some way.
Yeah.
So you mentioned debt by the country. So this is one way. The other way around, or the other alternative, how the US financed its trade deficit was also because the US dollar has historically been used as a reserve currency by different countries. So the US dollar as a reserve currency is getting competition by other currencies. So there are plenty of discussions about BRIC countries which are not using the US dollar anymore, but this might be another topic for another podcast. And then we already have, or the US already has, a big amount of government debt. So there is also kind of, I wouldn't call it a limit, but increasing debt at an even faster pace than in the past could also become an issue. So somehow it seems like he is looking to avoid a kind of very unfortunate outcome for the US, where they can't increase the debt anymore, and the US dollar is not serving as a reserve currency anymore. Because if these two outcomes could happen, then he would be screwed even more.
Yes, and I think it's also a call for this absolutely really exploding consumption. If you can import very cheap products from across the world, what happens is, yes, of course, one very big plus is the fact that you have relatively low price level in your country. But reality is, it's also consumption is really getting like an upward spiral. Like it's growing and growing and growing and growing, and consumption is one of the biggest drivers of economic growth. But in this case, it's not going to be the domestic economic growth, of course. It's going to be the economic growth of countries where they're importing from, etc.
And I think one important point as well is, consumption, yes, it could help the economy, but the question is also to which part of the economy it's really helping. So in the case of US, you mentioned, it doesn't help the production in the US because consumption is kind of spent to other countries. And here that's an important point, and he's mentioning that as well, that basically the working class doesn't really profit of that. Of course, you can argue they have lower prices for some consumption goods, but then overall, this is very short term, and midterm and long term, the working class actually suffers of that. And you have kind of the elite, which is profiting from this kind of very open free trade system.
It's true, absolutely. And this is, I think, a major problem because it leads also to redistribution. What is interesting is a big part of the industry in the US or certain strategic industry branches depend on imports for strategic resources. And that is going to be very interesting to see how this dynamic would play out. Because US, yes, they import a lot of things which we can argue they don't need to import or it's not necessarily needed, but there are also product inputs which really serve, for example, the car industry in the US or pharma, etc., energy, which they really need. And this is going to be a very interesting trade-off. Would they really manage to steer their tax regime in such a way, because obviously there would be reaction from Europe, from China, from the rest of the world. It would be very interesting to see whether they'll manage to steer also this part, that the products and services which they really need for their production, to kind of keep them not so burdened with the new trade, the new tariff regime.
Yeah, that will be very interesting. And it's also interesting to see how this turns out in the longer run, because also yesterday I read a very interesting statistics that in the end of the last century, so in the 90s, etc., the US was a leading country for most of the industries. Mm-hmm. And starting with this enormous free trade and buying plenty of goods from other countries, you lose the production, but with the production you also lose the kind of innovation spirit. So being on the top of every list of the biggest innovator globally, they actually dropped a lot. And I believe this is another motivation to bring production back into the US, because only if you make your hands dirty, in the sense, you also create innovation.
Absolutely.
And you can get back to a leading position. But this might be a very tough transition for a few years, but midterm, it might pay out.
Yes, midterm it really may pay out, and midterm it may. There is a turning point where too high tariffs may really slow down the global economic growth. I wonder, is such a slowdown really bad thing? Because a lot is very inflationary. So it would be kind of the trick would be to keep the healthy growth not affected by the tariffs, and the kind of growth which is almost like a virus, which is not necessarily needed for a healthy economy, to kind of really stream this one in the right direction, if it makes any sense. I'm trying to split the growth in a good part, which is really driven by innovation, which is really needed to have a certain amount of employment, etc. And then you have like an element of growth which is basically entirely financed by unnecessary consumption, by inflationary trends, etc., etc.
You also mentioned an important point, it's inflation, and I actually haven't got my head completely around that. So, we also read in the newspapers that the tariffs might increase consumption prices and we will experience inflation. But then again, given remembering my studies of economics, inflation is mainly a monetary kind of implication. So if you have too much money in a system in comparison to goods, then you get inflation. But very rarely inflation is driven bottom up by products. So if you have not enough money in the system, then prices will correct and inflation will be reduced. So for me, this is really a big question point, whether the argumentation that tariffs might cause inflation, because usually inflation is caused by too much money in the system.
Which we by default have.
Exactly, which we have anyway.
Yeah.
So for me, given, or let's assume we don't have too much money in the system, then consumption would go back and prices would equalize again. So this argument of having or causing inflation, I think it doesn't hold up.
You're right. Inflation has a monetary nature, but the other cause of inflation are exogenous shocks. For example, if all of a sudden you have, I don't know, like we saw in the 70s or in the 80s with gasoline and oil prices. And in this case, tariffs work as an exogenous shock, subject to producer being able to really pass it over to the consumers. And there are multiple reactions how a company can accommodate to such a new regime. For example, luxury brands may be entirely able to pass to the potential price increases to the consumers. But there is also another strategy, because luxury brands obviously are not to such extent price sensitive, right? It's not so price elastic, the demand, to use macroeconomic terms. But another alternative would be that they say we have anyway so high margins on particular goods and services that we can kind of absorb them and really keep prices as they are and really smooth over time. They're different. And then obviously you have the strategy that you say, okay, if you're a regular consumer good producer, to say, well, 20%, it is 20% price is higher. There are economists who say long-term, mid to long term, roughly around 50% of the levies would be passed to the consumers. To be seen, is that a bad thing? Again, we consume too much. Indeed, I mean, I think across developed countries, consumption is a big issue, because it's we consume by far more than what we really need, not only for the basic needs, but generally, like the amount of perks and stuff we buy. Yet there is an issue, and the issue is that if we have increased prices and the global uncertainty, which the biggest problem are not the increased prices, it's the global uncertainty which arises around that. And this can really, we may end up into a situation, at least for a period of time, of stagflation, higher prices and a little bit slowed or kind of no growth. That is the scenario which I see more troublesome than by default tariffs and a new equilibrium, until the world kind of finds their pace within the new regime and the new equilibrium is established.
I share that point. A new equilibrium needs to be found. And for me, it's a bit, or the US is like a junkie a bit.
Yeah,
so
it's a very good description.
So if you take away the drugs of a junkie, then you also go through the cold turkey and the period which is very difficult. And maybe you can't expect what is really happening, or I mean, you can't really judge about the situation. And for me, this is very similar. So what we might see in the US and maybe even globally, given the US is so connected with all the countries, with global trade. So this might be unpredictable, what we are going to see for the next few months. But then again, there are so many arguments, what we discussed already in the past few minutes, which speak for the tariffs, actually for the US. So I believe midterm, it's a good thing. But yes, short term, we need to find this new equilibrium. There is the cold turkey, and we will see.
Yes, the biggest outcome for me from these things is the fact that we are operating again under a new regime. Effectively, the free trade is over. And at least for a time, who knows if that's going to stay as a constant setup, or if there will be loopholes with, like, we do here an exception, there an exception. I assume it's going to be the second, with exceptions for critical industries. But the biggest problem is the uncertainty, because no one really can predict what is going to be the outcome.
But I don't really agree that free trade is kind of over, because many countries, they have tariffs already these days.
That's true.
and even higher tariffs than what we are seeing right now in the US or what the US wants to impose. So I think also the media is really exaggerating a bit what's going to happen. And also this media noise about free trade is over, blah, blah, blah. So this also gives this nervosity into the system. And I think we are far away from the free trade. So it might be a bit more protective, or he wants to steer it in the way that the trade balance is more in equilibrium again, which is an absolutely sensible idea.
You're right, that's true. And
very often he is put into a position that he is completely crazy and doesn't understand economics. But if we are looking a few years back, already in the year 2003, Warren Buffett actually wrote a very interesting article in the Fortunes magazine that a consistent trade deficit is extremely harmful for any country.
Yes.
And he also raised the need of increased tariffs, and he also proposed other means to achieve exactly the same. Mm-hmm. And in the end, I believe tariffs are just the way which is most intuitive to most of the people, because as you mentioned at the beginning, they work very similar as taxes. So this is the most easy way to implement. And it is important not just for the US, but for any country to have a trade balance which is over time more or less in balance.
Very, very fair points which you're raising. And indeed, it's true. We don't have to forget that effective prior to 2016-17, to his first period of as a president, his first mandate, he was basically, there were no tariffs on most of the imports in the US. This was literally, if we looked at the statistics and if the numbers are correct, it was on average below 2% from a lot of countries. And a point which he's raising, and speaking of free trade, I agree, maybe on paper it used to be a free trade because we used to have the biggest open economies had very low in absolute numbers. But if you think, for example, one of the European Union, we have a lot of levies in a different ways, right? It might not be labeled as a tariff. It might be labeled as a form of a tax. It might be labeled as a form of a different, some form and shape of levy or of a barrier. And it results ultimately in more expensive products. Mm-hmm. And so is China. And so is any other of the yes. And if you look at where they actually raised them to, it's partially really fair to say that it was kind of a reciprocal answer from what he's saying to the tariffs, which already their products were experiencing.
Yeah, I was a bit surprised today to read that on Switzerland, and given we are in Switzerland, this is a very interesting country for us. So he's raising tariffs of 31%.
It's higher than the EU.
Exactly,
EU is 20.
exactly. But then he also mentions that on the other way around, Switzerland is imposing 61 or 62% tariffs on US goods.
Yeah.
But I couldn't find how it really comes up with that figures, and even ChatGPT didn't have an answer. So this is something which we are definitely going to dig into. But yes, as you say, there are so many hurdles imposed by different countries to steer trade in the end.
It is, and for us, what that means here for our local producers, Switzerland exports roughly 18% from the total exports to the USA. Statistics end of 2023, followed by Germany and then Italy, and I think China is at place number 5. Germany and Italy are around 15%, if I recall correctly, and then we have China with around 5-6%, something along those lines. So, 1/5 of our exports are going to be a little bit more expensive. But let's not forget, what is also very interesting is the fact that what's going to be the dynamic on the currency side. Mm-hmm. What happens if the dollar devaluates further? And that is also a very, very big barrier for exporting, actually. And another point which Trump was mentioning was that a lot of countries would actually impose indirect tariffs on US goods through keeping their currency in certain ranges. Mm-hmm, mm-hmm. And it's true. I mean, currencies are a factor. The exchange rate is an essential driver of whether you export you raise your exports as a country or whether your exports are going down.
So you're basically saying that for him it's a mean of keeping the currency stable.
I don't know if he's going to keep effectively the currency as a direct effect, but yes, indirectly it would be the idea to stabilize or at least to work against the pressure towards the dollar.
So pressure to
devaluate.
Yes, I 100% agree, because let's assume that the dollar is not used in the same extent as a reserve currency and your debt is increasing as well. So these effects
down.
Exactly would make a lot of pressure on the US dollar. And with a low US dollar, you import more expensively. So you would have a very similar effect like with the tariffs, but just steered by the currency. But you wouldn't bring the production back to the US.
And the government would not cash in. No,
exactly.
cashing in.
But also in this respect, the step of imposing the tariffs is very decent, actually.
Yeah, it makes sense.
I struggle a bit to admit all these points, but given the research of the past few days, I think it's really a fair and sensible step.
Yes, and it's not the mainstream view, but we put our heads together, we read a lot, we viewed a lot how free is the free trade or the allegedly free trade. Is that effectively does Trump want to bring the country into a recession? The opposite is actually the case. I think he tries to stabilize growth and innovation, as you say. Is that going to cause turbulences midterm? Yes, it is, because we don't know how Europe is going to react. We don't know how China is going to react. We don't know what is going to be the dynamic. Also for us in Switzerland, it's going to be very interesting, not only the dynamic between Switzerland and US, but the dynamic between Switzerland and Europe may change. And Europe is our largest export.
Fair point.
With respect to our percentage. And it's interesting, as you say, Switzerland has 31% tariffs when we want to export to the US, to European Union 20%. Interesting, Great Britain came off quite well. I think it's only 10.
Okay. Yeah, but maybe they...
Let me have a look.
Yeah.
Yes, and Ireland, 10%.
Yeah, that's interesting. But you told me this morning that you stocked up your portfolio, took it as a buying opportunity, all the drops in the equity market. So do you believe or prices or the stock prices are going up again now, given we have the certainty about the situation? Or are you increasing your equity position now over a longer period of time? What's your strategy?
The second one, I'm increasing my equity position strategically over a longer period of time. And I'm just using, you know that I have this compulsive need to buy tech stocks.
I know.
And when they drop, it's like a sales prior to holidays. No, joke aside, I think some of there are very beautiful tech companies out there which are currently trading corrected a lot and are trading at a very interesting ranges. And for me, this is an opportunity to increase my equity engagement within the range of my saving plan, which is in the global equities, US and Europe, and but also particular position in tech stocks over time. And I never buy all in once. I go step by step, because in order to kind of have this time averaging element. But I think, long story short, I don't think that the long-term growth is in danger. I think it's a wake-up call to rethink the amount of consumption, to rethink certain inter-country dynamics, which would short-term really impact growth. But it's not a moment to panic and to start selling, and it's not a moment to back off from the equity markets.
I agree. And I mean, yes, tech always interesting to stock up. But for me as well, I'm really hoping a bit that some of the Swiss dividend stocks are correcting a bit, because this is a train I completely missed at the beginning of this year. And given some of the Swiss companies correct because of these trade barriers, so for me as well, it would be a buying opportunity and to stock up the portfolio over a longer period of time again.
It's a very good.
Yeah. I mean, it will be exciting to see how everything turns out, and maybe we should do a follow-up in a few months' time on this topic.
I think we should. And for our users out there, it would be lovely to hear, where do you see S&P 500 at the end of the year?
Yes.
Please do a guess. The same for SMI, and the same for Euro Stoxx 50 or DAX, whatever you prefer, whatever you're more familiar with. Be very interesting to see whether we're going to dip into recession, because these fears are very real and are out there, or whether it's going to be a short-lived turmoil on the markets. With short-lived, I mean somewhere down the road until end of May, probably the summer, and maybe we should buy in May and go away.
Maybe.
And yes, happy to hear your prognosis.
Perfect. Thank you very much, Luba.
Thank you. Super insightful and very interesting. And if you have any questions, don't hesitate to write to us. As always, we are happy to answer, and we will deep dive into what's happening. Thank you and goodbye.
Bye-bye.
Where banks are silent, we speak. A podcast by You Mushroom.